Don't like the weather? Wait 5 minutes. That's the famous phrase about the weather in my home state of Colorado. Why does that matter? Well, the same also appears true of the crypto market. Bitcoin fluctuating wildly since President Trump took office, even wavering in the last 24, 48 hours before and after his 25% tariffs were enacted. Is this the volatility investors should expect moving forward? Thomas Perfumo is the head of digital asset strategy at Kraken, and he joins us now. Great to have you here to bring some clarity to what's going on, because I wake up, Bitcoin is down dramatically on the tariffs. Suddenly it looks like a delay in Mexico, at least by 1 month, and Bitcoin has almost recovered all of its losses. Explain that for me.
Sure. I mean, I think the main message here is going to be that as crypto becomes increasingly mainstream, becomes a more legitimate asset class, it also comes with the double edge there, which is that it's increasingly correlated with the macro economy. And so the analogy that I like to use is if you go back to July 31st, you had the Bank of Japan surprise the market with a rate hike, an interest rate hike. And within that weekend, or by Monday morning, early August, you had the S&P down 6%. You had Bitcoin down closer to 20%. And so you have to treat crypto, Bitcoin, Ether, et cetera, as a risk asset that has high beta to the macro economy. And again, we're not immune from these kind of macroeconomic shocks. And so I think that kind of uncertainty, unfortunately, is going to play out in crypto as well.
So would you say it's mostly closely correlated with the NASDAQ as a tech stock?
I wouldn't say that it's one index in particular. So for example, Bitcoin in the last 30 days has a rolling correlation with the S&P of about 0.56 and with the NASDAQ of 0.53. So it's pretty equal on both. Of course, they're also highly related because you have such a big component of the S&P being tech-driven nowadays. So I would just look at it more like a risk asset and having high correlation to risk assets in general.
How do you account for Bitcoin, as I said, pretty much recovering? Meanwhile, Ether's been slammed and is still down rather dramatically, as are meme coins. Why are the two treated differently by investors?
Well, meme coins is a totally different market in of itself. It's actually a much more niche market than I think people appreciate. There's much fewer people trading meme coins because it's the majority of activities happening on DEXs. And so when you look at like unique wallet numbers, for example, that are interacting with some of these DEXs, it's much smaller than you would think. And so in terms of overall market, meme coins often in terms of market value are around 3% or less of total crypto market cap. In terms of volume, it's also mid-single digit. And so there's a lot more attention on meme coins, and I think people, than the market actually has fundamentally an impact on from those coins specifically. With Ether in particular, this is one where the sentiment has been very difficult. And so it's been underperforming Bitcoin across the board for the last year. And so when you have these kinds of shock factors, you see it there happening there as well. We also saw a lot of liquidations over the last 24 hours. And my suspicion is that you had a lot more activity on liquidations with Ether in particular, Bitcoin receiving a lot more support in general in these kind of downdrafts.
With the caveat that President Trump talked throughout the campaign about being very pro-crypto and bringing in a lot of the crypto community into his campaign, and it appears even into the administration, specifically, why so much optimism? On what?
Sure. I think I like to contextualize this a bit. If you think just over 2 years ago, November of 2022, you had the FTX implosion, right? This massive fraud that came down, and it created a storm in terms of the industry reputation. It was perhaps the most detrimental event. It was kind of like an asteroid event for us. Not the likes that we saw unless you're looking back like 10 years ago to Mt. Gox. And so when I think about that event and where we've come from, we had an entire regime shift where for the last several years, 2 years now, we had to deal with things like Operation Choke Point 2.0, where as an industry, it was becoming increasingly difficult to integrate ourselves into the traditional financial system for something as simple as being able to access the banking system. And then, of course, you also had an environment where it was regulation by enforcement. And so there was this huge lack of clarity where, as an entrepreneur, if you're building in this space, in this technology, you really have no idea what the posture is going to be from a regulator, and you have no line of sight into how you can operate yourself in a way that's compliant and in a way that is going to keep you safe from any kind of action. And so it really put a pause and a chill effect on the industry as a whole. And in the last couple of months, since the Trump's presidential victory in November, what you're seeing is a wholesale shift in the administration itself. So you have pro-crypto innovation folks like Scott Bessent, you have Howard Lutnick, you have changes like Travis Hill in the FDIC, and you're seeing again a wholesale shift in terms of crypto policy towards one where you have increasing line of sight. And so again, from an industry perspective, from an entrepreneurial perspective, you have people who now see this as an industry where they can come back and start building, particularly in the US, to promote this technology without that kind of fear of repercussion and uncertainty where they don't really have any clarity on the direction of, from an administrative perspective, of how they're going to be treated.
All right, I'm coming along. Okay, so a strategic Bitcoin reserve, how would it work? How big a catalyst would it be for the industry?
So this one is, I like to call it as like perhaps the biggest step change positive EV event that could possibly happen this year. And what I mean by that is, we've seen the version that Senator Lummis has proposed, which is purchasing $1 million, a million Bitcoins and stockpiling that over a 5-year period. And that would be, in my opinion, the most like extremely positive, but also perhaps the lowest probability of likelihood that it passes through because of it's a big change. And so I think that the idea of a strategic Bitcoin reserve being something that's open for discussion, that even the president is entertaining as a consideration as part of the executive orders, I think is really meaningful because it really underlines this cultural shift that's happening from a policy perspective and what I think is matching more mainstream demand for crypto, which you've seen in the ETF over the last year, for example. Now, if we took it to the extreme, we assume, hey, there's a strategic Bitcoin reserve, and now we consider Bitcoin on the level of an asset like gold. I think what you start doing is entertaining narratives from a valuation perspective, which is to ask yourself, which asset do you think is going to be the future stockpile asset for governments abroad in the U.S. in general? And if you think of it on the let's say on the same plane as gold, with a roughly, call it 19-20 trillion dollar market valuation of all gold outstanding in supply, that would equate to something like closer to a $1 million price target for Bitcoin. So again, I think this is kind of the interesting story of the year in that it's a very positive expected value event, where even though it's a low probability, the impact is potentially so great that I think there's going to be a lot of attention on this catalyst going forward in the discussion of it. But really hard to say what it's going to look like.
Yeah, and to your point, why is its best comp Bitcoin digital gold?
I think it's pretty straightforward because when you think about the concept of what Bitcoin is trying to accomplish, it's this idea of a peer-to-peer commodity currency with a very reliable fixed supply. And so that has historically been the service that gold has offered us until we've departed from a commodity-backed gold currency back in the 70s with Bretton Woods. And so I think for a lot of people, they view Bitcoin as functionally serving the same purpose as gold, in my opinion, in a superior manner because it's more highly divisible, it's more mobile, it's 24/7, 365 over the internet. And so there's a lot of advantages that Bitcoin has that gold cannot functionally support itself. And so if you believe in a future where people increasingly value a digitally native economy, digitally native commodities, then you can start to see and materialize this kind of narrative manifesting itself that is Bitcoin is the new gold. And so I think that's the story that people latch onto.
So when JP Morgan Chase CEO Jamie Dimon just a few weeks ago calls digital currency a decentralized Ponzi scheme, what does it do to the industry, to trust, and what would you say to him?
Well, I mean, Jamie Dimon has had a skeptical view about Bitcoin for the last decade almost. I think he's always been of the mindset that it's blockchain or decentralized ledgers, not Bitcoin. I think of it as the opposite. I think, of course, decentralized ledger technology is important and it's impactful, but it's equally impactful to have a commodity that it sits outside of institutional ownership. And so when you think about some of the failures of fiat currency, it's almost always having to do with the fact that it's institutionally organized. You could even call it manipulated. And so when I think about the value proposition of Bitcoin, it has to do with the fact that it's a decentralized ledger where no one owns the issuance and no one oversees the arbitrary rules around targeted depreciation and value erosion, et cetera. And so I personally think the story is more Bitcoin, not blockchain in that context. And so I think my message to some of these people, and of course they're legends in their space, but the demographic shift, in my opinion, is moving towards an individual focused economy. We're talking about people, grassroots movements who have to take more ownership of their investments, of their future. And I think a big part of that is going to be the reliance or relevance of institutional trust. And as long as people see that they can use Bitcoin as a trustless commodity, I think that lends a lot of value, particularly when they have a lot of failed trust in a lot of the institutions over the last decade or two.
All right, final question. Bitcoin's just above 98,000 as we have this conversation in early February. Where is it 1 year from now?
I can't give specific price targets, but I like to contextualize things in terms of the story of Bitcoin. So the narrative around the Bitcoin halving last April, you now have a commodity that's about $2 trillion of market value outstanding, with only 5% of its supply remaining to come into circulation over the next century. We're talking about circulating supply inflation of less than 1% per year, and that's going to continue to fall going forward. And you have a commodity that I think has less than 10% global adoption around the world, but nonetheless is one that lives on the internet, which more than 2/3 of the global population has access to. And if you believe that crypto is going to be the financial underpinning of the future when it comes to financial infrastructure, and that Bitcoin is going to serve as the next version of digital gold for future generations, then I think you have this storm of demand chasing a very limited supply. And so I think that gives you a sense of how I feel about very long run, the value accrual to these coins. When it comes to trading prices, just know that crypto is a very volatile asset class. I think what people have seen is that holding on to Bitcoin for from a long-term horizon has been a very beneficial way to gain exposure to it. And it's important to also, again, be safe, make sure you're taking only as much risk as you have tolerance for, and doing so responsibly.
So do not wake up and check the prices every morning. Thomas Perfumo is the head of digital asset strategy at Kraken. Appreciate the time. Thank you.